All right, here we go. Start streaming. I think we're good. There we go. All right, and let's see. Let's pop open this. All right, record. All right. Yo, what is going on, y'all? We're back with another episode. Me, Sinclair Crypto. And
Robert Prince, freelustrators.com.
Yeah, so we got a few things that we want to talk about today, but hopefully you guys had a good weekend. Now let's touch in. We're gonna talk about pretty much what's going on in the crypto right now. About this stablecoin regulation that Biden wants to do as well. We're gonna touch on that because it could be. I kind of have a feeling on why they want to have some type of regulation going on with stable coins, but I'll talk about that in a bit. And also, and Robert, what do you want to touch on today?
I'm going to talk about the stock market. It's basically dipping right now. The start of a bear market, I guess. And I'm talking about the Evergrande crisis, how that's affecting the stock market and it's affecting Bitcoin. And right now, Bitcoin and Sol, they've been going up, so I think that's worth mentioning too. And I'm talking a little bit about NFTs as well because I've been getting into NFTs, so I'm gonna talk about that.
Right. All right. So let's actually let me just make sure I got this because I got this connected. There we go. I don't know what that was. All right, so let me see. Let's get into what's going on in crypto. Let me just share my screen. Bear with me, guys, because I just got a new setup, so I'm trying to operate things. It's a little different for me right now, but it'll get smooth once I get the hang of it. But let's see. Share screen. Okay. Okie dokie. All right, so let's see what we got going on. This weekend, there was a big pump going on. It just came out the blue with Bitcoin and Ethereum. It was at about 42, and I believe it shot up to like about 49K. If you look at the Bitcoin chart right here, let's see. Let's go to the weekly. So let's see. Yeah, over the weekend, it was at 43. It was at 43. The highest it went up to was actually yesterday. Actually today it went up to 49. So that jump right there, I don't know where it came from because there was a lot of FUD going on with China and everything. Yeah. And Robert is going to touch on that. But that just came out of nowhere, and I'm like, oh, okay,
$6,000 it went up in 5 days. Yeah.
Yep. And Ethereum also follows suit as well. Usually, when Bitcoin goes up, Ethereum will go up. Bitcoin goes down. It's pretty much, they're both correlated. But yeah, they're slowly going back. And Bitcoin, I believe I said this last week, Bitcoin is having a hard time staying above or even getting to that 50,000. You know what I mean? And like I said, I don't know. That's a hard that's a tough barrier for it to break through at 50K. And but when it does get to that resistance, then okay, you could probably say, hey, Bitcoin is something to look at, but until it gets there or stays above it, then I don't think so. But that's why when people say 100K still this year for Bitcoin, I don't really think 100K is in the cards for this year. Maybe next year, but who knows? But anyways, you got Ethereum right now sitting at 33K. 3,300, and you got Hex right now at 41 cents. And if you look at this Hex chart right now, it's looking kind of healthy because even though we got this sideways action going on, there we go. Even though we got this sideways action going on, it's still not dipping below this 37 mark. Actually, it's usually around this 40 cent mark right here. So it's looking pretty good. And Robert, I don't know what you call this thing right here. Maybe you can help me out, but I've seen this on a few charts where they'll have this line right here, like the higher lows going up, and then you have the higher lower highs going down, and then they connect. What do you call that, Robert?
Symmetrical triangle.
Symmetrical triangle. That's what it is.
Mm-hmm.
So usually when I see these and they meet, then usually they either pop to the top, or they dip down. But Hex and Dome, when this happens, it would pop to the top. You know what I mean? So we'll see what happens. But yeah, Hex is looking healthy. You know what I mean? It's still staying around this level. Even with the big sell-offs, we had a big, people selling 3 million, 5 million Hex dollars worth of Hex at a time, and it's still staying healthy. So that's one thing to look at right there. This is I would consider this right here 41 cents a dip. And this may be something, not financial advice, but this may be something you want to look at or trying to buy if you're looking to buy any Hex. But yeah, that's pretty much it about Hex and the chart. So yeah, pretty much how crypto is looking pretty good right now. It's looking stable, I would say, compared to how it was looking like 2-3 weeks ago as a whole. But Hex is always has been looking good, so can't say anything about that. But all right. Let me see. So I'm gonna pull up this article real quick because we're gonna talk about stable coins, and stable coins is pretty much an essential part of cryptocurrency because it allows you to pull out of any crypto that you're in. Like, say for example, you're in Bitcoin, and Bitcoin right now is at 47K, and you're like, yo, you know what? I have a feeling that it may dip down to 42K in the next few days. And I don't want to lose my value, but I don't want to necessarily cash out into fiat. You could be like, hey, you know what? I'll put it into the stable coin. I'll put my 47K into a stable coin like USDC or Tether or DAI. Those are a few stable coins that you could put your wealth into. But I would say, that's what normally a stable coin is useful for, is so that way you don't have to cash out into fiat, but still have your coins that's pegged to $1 where it's not going to fluctuate. If it does fluctuate, it may fluctuate like 0.5% or so, but it's not going to have these crazy volatile dips or rises like any other crypto. So if we pull up this article right here, let me pull this up. All right, so now this article from Cointelegraph, written by Sam Borghi, Biden admin weighing bank-like regulation for stablecoin users. The United States government appears keen to tame the rapidly growing stablecoin market, according to reports. And I'll get into why I think this is happening. The Biden administration is reportedly considering a legal framework for stablecoin issuers that would put them in the same category as banks, raising questions about the future of crypto regulation in the country. Citing people familiar with the matter, the Wall Street Journal reported Friday that the administration is looking to convince Congress to create a new special purpose charter for stablecoin issuers and other companies that fall within the same category. Although it's not entirely clear how the legislation will look, it's expected to be tailored specifically to these type of business models. So this is a little sneaky way that they're going to do this to pretty much say, okay, well, you're now that you're in a fiat type of currency, this is now a taxable event, right? They may consider this a taxable event, and I'll explain about that. Policymakers have been sounding the alarm over stablecoins in recent months because they believe these dollar-pegged assets aren't properly regulated. Earlier this week, Federal Reserve Chairman Jerome Powell told the Financial Services Committees that stablecoins like Tether, USDC should be regulated within the same parameters as money market funds like bank deposits. Nevertheless, he remains steadfast and stating that no blanket ban on Bitcoin or other digital assets was in the card. All right. let's finish this up. Let's see how long is this. All right. As Cointelegraph reported in July, joint research by the Fed and Yale University outlined two regulatory frameworks for stablecoins in a 49-page paper called Taming Wildcat Stablecoins. In that paper, the authors argued that policymakers have only two choices, which respect the stablecoin regulations, make them equivalent to public money, or tax them out of existence via central bank digital currency. Yeah, make them equivalent to public money. So let's go into this real quick, because what I think this is, I think this is pretty much because it's hard to really keep track of. Now, say for example, if you have a wallet, right, like a MetaMask wallet or whatever wallet that holds your crypto, it's hard for the government to keep track of what your value is, your personal value in these wallets, because there's no social security attached to these wallets or anything like that, unless you're in a centralized exchange, like Coinbase or Binance.us. Unless you sign up with them, you do the KYC process, then okay, then they have the information that's needed to a certain extent. But if you're in a wallet, like a MetaMask wallet, Trust wallet, you're doing these swaps or whatever, they don't know. They're in the dark of what you got. But also in these wallets, you have the stable coins. So if they want to have a regulatory stable coin, right, or they want to have regulations on stable coins, then it's possible that they could force these wallets to say, hey, like, we need the information on these stable coins, being that this is actual like public money or a copy of the Federal Reserve or whatever whatever terms they want to put. They could possibly say that and get the information in, like, okay, this person right here, they exchanged their $10,000 worth of ETH into $10,000 worth of USDC. And now that is a taxable event. So we have this. Now this person has to file their taxes from any type of gains that they may have made from that Ethereum, So I think that's what it is. That's what it's looking like. But I don't know, this is no fight, because who knows, like, the government always tries to say these little scare tactics and everything like that to get you, like, oh, you know what, this is FUD. This is, Biden, they're trying to regulate the system. Like, oh, we're going to be having to pay like crazy taxes, especially from what he said last year. So who knows what's going to happen, but I wouldn't worry about something like that until it comes. And I really don't think it's a big deal. I don't know how you could kind of like navigate this and be slick with it, because you, like, I don't know, like, I'm not saying don't pay taxes, but what I'm saying is, like, be smart about your taxable events. You know what I'm saying? So like, if you're like, if you're, for example, in Hex and you're staked out, that's not a taxable event until you end your stake, right? And until you, in some countries or some jurisdictions, until you actually mint that Hex. I mean, sorry, not mint that Hex. Well, yeah, mint that Hex is one way. But also another way would be to turn that Hex into fiat, into whatever country currency you're changing it to. That could be another taxable event. So this right here just may be another way for them to, create taxable events or make it easier to track the taxable events. So I don't know. That's my take on that. Robert, what do you think, man?
The government's gonna find a way to get their money. So.
Mm-hmm.
And like you said, like any like Coinbase, Binance, like when you buy from there, even if you like transfer, so I use Trust Wallet. Like if you transfer your stable coins or whatever you earned in Trust Wallet and you transfer it to sell it on like Coinbase or Binance, they're gonna find out about that.
Yeah, because that's the thing. Because once you get from these decentralized wallets and then you put it into that centralized exchange, and it's attached to your Social Security, like it's attached to everything. You know what I mean? So it's kind of like, how do you get around that? Maybe you could say, hey, like, somebody that's I don't know, maybe you know a few people that you could be like, hey, I'll send you something. I'll give you a cut of this and that. So that way it's not tracked to your specific account, like, or maybe you could be like, hey, I want to buy this, $30,000 car, but I got my money sitting in USDC in my MetaMask or my Trust wallet. Hey, I'll give you 32,000. I'll send you $32,000 worth of USDC if you buy this car for me, because you don't want to create that taxable event. I'm not saying do this, by the way. You know what I'm saying? I'm just saying like that could be a way to get around it if you don't want to put that in your Coinbase or your Binance or whatever centralized exchange that you signed up for. So I don't know, man. Yeah, I don't know.
You basically have to buy with that money in a decentralized exchange.
Yeah.
But I don't, the government's been trying to, make laws on crypto forever. So
yeah,
hopefully they don't continue down this road. It's getting crazy.
Yeah, it is, and I don't know. I feel like they just want to they obviously they want to make as much money as possible. It's the government, right? They're in debt, so they need to find ways to get their money up. And obviously they're not going to be like, hey, we're going to raise the taxes for every United States citizen to 65% or something like that. They're not going to do that. But they're going to find their ways to tax people that are making, a good amount of money. You know what I'm saying? And obviously crypto. Oh, damn.
Oh, my bad.
Oh, that's great.
I'm going to share my screen real quick.
Yeah. Go ahead.
Yeah, you were talking about the debt. We are in, trillions of dollars in debt, and with the law that Biden's trying to pass, the $1 trillion infrastructure bill, is only going to keep on getting worse. So this is going to create more inflation. I think this law is currently waiting for House approval. It didn't pass yet. It's still.
Yeah.
But yeah, the stock market's been basically reacting negatively to this kind of news. There's more money being poured into, our economy. They're printing out more money, basically. So.
And it's funny because they're printing out more money, but it's like I just heard something where we ran out of money or we're running out of money. So it's like, yo, how do you say something like that and then you print more money in some type of infrastructure bill or whatever bill it is? And doesn't make any type of sense.
Yeah, their interest rates hikes are basically increasing, and they're saying that within the next year it's going to keep getting higher and higher. You could read this article yourself. It's getting crazy, and then a lot of news about the Evergrande. It's basically real estate in China. The property in China's been pretty much in a bubble, like how it was before 2008 in the U.S. This one real estate company, they've basically been taking out debt after loan after loan, and building up these new properties. And it's just been nonstop. They don't even pay off their old property or their old loans. So it's just been like a nonstop bubble of building. And a lot of people, they can't even, they can't even afford these houses. So the Chinese people, they're taking out bigger and bigger loans to try to get these houses. And it's just nonstop. They're buying higher because everybody wants property in China, right? So they just keep on buying. That's basically a bubble, and that affects Bitcoin because a lot of our, Bitcoin mining too, a lot of that stuff is in China, and I think I think the Chinese government, they started another law for more regulation on crypto.
Yeah, it's kind of funny because China, they're doing this regulation on cryptocurrency, but I hear all the time, and I don't know if this is just the cryptocurrency trying to pump themselves up, but I hear all the time that China loves VeChain, for example, and VeChain is a pretty much a cryptocurrency that you're able to scan certain products, and keep track of it. But But I don't know. Maybe China likes certain cryptos and they don't like the other ones. I don't know what it is, but yeah, what's this about?
Yeah, it's more like talking about banning Bitcoin mining. It's been nonstop cracking down, and then the anti-monopoly laws with like Alibaba, the whole Chinese market sector has been just going down nonstop. Like I've been wanting to post on Twitter, like maybe we should buy, some Chinese, because Alibaba's pretty big, but this is just nonstop down. Like I can't even time the reversal on this. Like I keep waiting for a good time to buy. No, it keeps on going down.
Oh, that's like a roller coaster right there,
Yeah,
yo.
it's just
Nitro.
it went down
Yo.
almost 50%. It was at 320. Now it's at 145. So common sense would be like, maybe it's a good time to buy. It's down half the value, right?
Yeah.
But with stocks, it's just you never know. There's always a degree of uncertainty.
Wow.
So I don't want to alert people in these crazy market conditions. We have the infrastructure bill that's getting passed. We got increasing interest rates. You got the whole property bubble in China, and I pretty much called that the market was going to go down. I already figured with all this crazy news that's happening that the market was going to eventually crash. And as you can see,
you was talking about it. You was talking about it with the S&P like a few weeks ago. Like, yo, this is just it's gonna go down. You know what I mean? And now everything is falling into place. Like,
I posted some SPY puts like on my Twitter. Let's see if I can find it. What is going on? I'm trying to get to my tweets.
Guys, also, if you're watching this video, please hit the like button if you find it value, and subscribe to the channel. And also, subscribe to the channel and click the like if you're finding value on this.
Yeah. Follow me on Traders at Traders Fearless. I posted a tweet here. When like the exact time the market cracked that trend line that I was talking about, I bought some SPY puts, and if you would have held on to it from September 17th to October 1st, you could have made like $2,000 on this debit spread, and it only cost like $400. So you could have made like triple, quadruple profit. So like, definitely pay attention to what I'm posting. Yeah,
definitely some gems right there.
So basically, like if the price falls between 435 to 425, you're gonna be in the money. So you're gonna be making money. I don't have the exact calculations. It's kind of too late to make it. I usually use options profit calculator to do all of that. Like if you're new to options, definitely this is like a must-have site for calculating like spreads and all that. And spreads is a little complicated. I'm not gonna talk about that in this video. No,
that's cool. That's definitely these calculator tools is definitely useful if you want to get the exact, you know what I mean, like if you want to make your predictions a little more accurate, definitely use these calculator tools for sure. But
I'm gonna give a quick example of what I'm talking about. 410. This is probably not the best. October 6th, maybe. It's hard to like backtrack since it already happened. I can't really post the risk reward, but usually like I look at the risk reward before I enter any kind of trade, especially with options. Because with options, you could lose the whole amount of what you put in. A lot of people, they put like $1,000, but if the stock doesn't hit your price at the exact date, you're gonna lose that whole $1,000. Yeah. So I prefer the spreads because spreads are way cheaper. Instead of paying $1,000 in options on a single option, you could pay like $100 or $200, and you could make triple that if you know what I mean.
Mm-hmm. Yeah, because that's
And you don't have to pay that much for, like, especially weeklies. Weeklies, and so weeklies is just like, this week or next week, and they're extremely cheap. Like, you could buy, like, you could do like one, and that's $33, right? And you can make, $2,000 maximum return. But it has to make a huge move. Like, it has to go down like $400 within 3 days, which is crazy. But you have to know, like, where you see the stock market going, or where you see the price of the stock going within the set amount of time. Like, you don't want to put like a ridiculous price, right? You don't want to put like 400 and you only have 2 days. It can happen, and that's what I like about the SPY, especially when it's crashing. When a SPY crashes, it usually crashes hard.
Do you think that's going to go down a lot further?
It can, like you see here. Like, I was.
Oh wow.
Yeah, within a few days, it went down 339 to 312, and that was only 1, 2, 3, 4. It went down $20 in 4 days. And it's even worse. So, like, right here, it went down 287. It's more than $100 in 1, 2, 3, 4, 5, 6. $100 in 1 week. So if you think about that, $100 in 1 week. So imagine it's going from 445 to like 345. And you'll make crazy amount of money if you can actually predict that. Nobody could really predict that. But as you can see here, like, just putting down $33 and it actually hits that price, you just made $5,000.
Yeah, that's definitely some good information for yeah, that's some I'm just saying that's some good information for people that definitely want to know about that. Even like a standalone video for that right there would be valuable to go more in depth in that right there, because that's your type of game, then that's something that you want to know about on how to predict those type of things for sure. Yeah. Go ahead.
Oh no, what were you trying to say?
No, I was gonna say, if you're done with this, if you want to talk about that Lil Uzi story.
So I've been trying to get into NFTs, with Gary V. He's basically been nonstop promoting it. So I said, why not? I'll take a look.
Yeah.
So I've been getting into the space, trying to flip NFTs as like a little side hustle kind of thing. But I saw Lil Uzi basically promoting this project, and I'll show you the tweet. Eternal Beings NFT. This is Uzi's profile. Eternal Beings NFT, and even Snoop Dogg, he retweeted it. So I said, okay, I'm gonna check it out. The day it comes out, he basically deleted all his tweets about it, and the price of the NFT just basically shot down. It went from 2.5. This is in Solana. So it went from 2.5 Solana to 1.67. So if you would have bought it the day it came out, you would have lost like $100. And it actually went down lower. I saw it went down to one Solana.
Wow. So much half. Yeah.
Right now, I'm just worried of any famous person promoting any kind of project would. So I basically, there's like a rumor going around that these marketers are contacting these high profile people to basically do these scams, these rug pulls. They get them to promote it, and then they just rug pull the whole project. So that's the kind of FUD that's going around with this Eternal Beings NFT.
Yeah, that's the thing. They'll give these guys a bag, you know what I'm saying? Like, hey, we'll give you guys, blah, 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 such and such. Like something valuable though, like that. That's not like a promise coin. So they'll be like, hey, I'll give you Lil Uzi. I'm not saying this is what happened, but they'll be like, hey, Lil Uzi, we'll give you 1,000 Solana. Just, hey, post these tweets, blah, 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 blah. You know what I'm saying? And then they're gonna make more Solana. The people that are having these NFT projects, they know they're gonna make more than 100 Solana or 1,000 Solana, whatever they're giving Lil Uzi, and then it'll be like the rug pull, whatever it is that they make,
because they have,
you know what I'm saying?
They make 10,000 of these NFTs, right? And it's $300 or $300 each NFT. They made $300,000.
Wow.
Actually,
yeah.
Did I do the math?
Well, I don't know. I don't know if it's right, but still, 300,000 is nothing. You know what I mean? That's a solid number right there. 300,000 is a lot of money.
My bad.
$3 million.
$3 million. Sorry about
even
that.
More. Yeah. So
they made $3 million on this project.
And if you think about it. And what they probably paid Lil Uzi, like I said, we're just speculating right now, but they probably could have gave him $100,000, $200,000. And they're gonna do it. Look, Lil Uzi used to perform in Sherman Theater when I lived in Charlottesville, Pennsylvania. Charlottesville, Pennsylvania is a small town, and this is kind of like when Uzi was coming up a little bit. He was known, but he was still kind of like on a come up. And look, Sherman Theater, they don't have that much money to be paying these artists, so they probably gave him a bag of maybe like 20,000, not even 20, maybe like 15, maybe 20,000. But if you think about now, like Lil Uzi be like, yo, like 100,000 to promote an NFT. You know what I'm saying? And that's not just him, but like a lot of entertainers, Lil Baby, and actually Mr. Beast. You know who Mr. Beast is, right? The YouTuber guy.
I'm not familiar with that one.
Yeah, but Mr. Beast, he's like a guy that gives out money and stuff like that. He's like, he does these crazy like things, like he'll like go to somebody's job and give them like a brand new car or whatever it is. But Mr. Beast,
okay, I know what you're talking about.
And he was actually, and I'm not saying that Mr. Beast tried to scam anybody, but Mr. Beast actually was involved in a cryptocurrency, and that cryptocurrency itself had a rug pull. So Robert, yeah, what you're saying right now is like definitely correct. Like they'll contact these influencers and these big profile musicians or any entertainer that they can, because they have the clout, they have the more trust of the world than these projects do. You know what I'm saying? So if they get behind these entertainers, then it's so easy to be like, yo, this was gonna happen, and then an easy rug pull. And then you have what's going on, how Lil Uzi, he deleted his tweets, right? That's what you were saying? He deleted his tweets after this?
Yeah. And he hasn't mentioned anything about it after. It's kind of like he's trying to make it so it didn't happen. Yeah. And then and the person that made the NFT, he basically, lost it, and he's pumping up the price, right? He's like, everybody take your NFT off the market and buy up the floor. The floor is basically like the lowest price of the NFT. So when you hear floor, it's just the lowest price. So when it first came out, it actually went to three. So it went from 2 to 3, and it was pumping up. But then Uzi just deleted his tweets, and then it went down to like 1. So
yeah, that's crazy.
Just be careful with these projects. Like any high profile, don't mess with it.
Yeah,
stick to like something organic. Like if you're into the NFT market, just look for that organic growth.
Yeah, if a coin or anything, NFT, whatever it is, if it's supposed to do what it does, then it doesn't need any type of clout in the beginning from any big if you look at it from day one, like Bitcoin, Ethereum, Hex, all these coins, they went from 0 to 100 without the backing from any big name. So if a company needs a big name to start off with, you really got to think about, all right, take a step back and really do your research on that.
Like the Bored Ape Yacht Club, this was, a completely organic growth, and it's just been like, this is a floor price I'm talking about. The lowest floor price is 40 Ethereum.
Wow.
40 Ethereum. That's $138,000.
Wow.
For these NFTs, and this is like the Apple and Microsoft of NFTs.
Yeah.
So
that's the ones where you see like a celebrity, they'll have their display or their display picture on their Instagram profile. That will be the, that will be it. The Bored Ape joint. You know what I mean? So to show that, hey, like, yeah, I got that type of money. So yeah, you're right.
It's just been a nonstop uptrend, like from 3 Ethereum, just keep going up. And you'll see a lot of these projects too, Cool Cats. And you think it's silly, right? JPEG but I guess they have their own utility. Like a lot of these projects, they have their own use for it.
Yeah.
But it's the same thing. Just non-stop up. The NFT market is going crazy. Like especially Solana right now. I'm gonna pull up the Solana chart. Like while the stock market is going down right now, the Bitcoins like over the weekend it seems to be bouncing. So I've been pretty focused on this. Yeah, so Solana's been, that triangle you were talking about, right? Well, it's not really a triangle. This is more of a.
But yeah, that right there, that bounce, that had a healthy bounce. But yeah, that's not necessarily what I was talking about.
Yeah, that's not
because,
the triangle. Yeah. I know what you're talking about those for hex we're talking about if you don't recall.
Yeah, exactly. Yep.
Yeah.
But yeah. Yeah,
Solana is like, they have their own NFT, like how they got Ethereum for NFTs, then they have Polygon, they have their own network, and Solana they have their own network as well, their own blockchain. So right now this actually doesn't look too good. It's gonna pull back some most likely.
You think so?
Yeah. Right now it's it's already up pretty hot. So usually, remember how I said like the farther it gets from the moving average, the more likely it's gonna pull back to that average. Like you usually when you want to buy at that average, this is usually the perfect time to buy, which is really hard to time this. But if you buy at the moving average, you're usually gonna do well for yourself. But once it goes like really far from that average, it's gonna pull back. Just that distance. And to tell that distance, I use the RSI. Usually when it's oversold like that, that means it's too far from the average. And if you don't know what the moving average is, right now I have the simple moving average, the 50-day, 100-day, and 200-day moving average. And it's basically an average of prices for that set amount of days, right? The average price of 50 days, like the average of this for 50 days, and that'll be the 50 moving average. The average price for 100 days, that'll be the 100 moving average. You know what I mean?
You can have a moving average for even like 14 days, 10 days as well, right?
Yeah. You can have 14 days. You can have 8 days. But usually a shorting moving average is for like day trading.
That's not as accurate as a prediction because it's in a shorter time period, right?
Yeah. You'll get a lot of false signals. And people use that for day trading. Like if it crosses that 8 moving average, I'm gonna buy. So
okay. All right. So yeah, that's pretty much it for this episode, guys. Got a lot of information out there, for you do your research on, and yeah, pretty solid. Let's see. Let me close this up. You got anything else, Robert?
I don't have anything else. That was all I wanted to. The NFTs. We touched on the Biden regulation.
Yeah, man. A lot of stuff going on right now. A lot of fun in the market. You got the S&P. You got the China joint going on. With the real estate. You got the Biden. So you got a lot of stuff going on right now. But this is when like Robert does the trading. I do more of the long-term investing. So for the long-term investors, this is to test your hands. You know what I mean? Do you have the hands that are going to fold? You got the paper hands, or do you have the hands that are going to hold on to this stuff, even though there's a lot of uncertainty going on? That's up to you. You know what I'm saying? But at the end of the day, it's not financial advice. But you still want to somehow take some profits if you haven't taken any profits. But also, do you want to take that risk and sell your whole bag, and then where you're investing in goes up and to the right? You know what I'm saying? So
yeah, long term, you won't be right now is the time to be buying if you're long term investing. That's when that dollar cost averaging comes in.
Yep. Dollar cost average. So that's pretty much it for you guys. You can follow me on Twitter, Hex on Dex.
And then at Traders Fearless.
Yep. And yeah, that's pretty much it. We'll catch you guys next week for another episode. Y'all take care. Peace.
All right. Thanks for tuning in.